Another new background for you guys, and a new president of the United States. Fun fact, $1,000 of Bitcoin when Donald Trump took office is worth $50,000 today. And here's the price of Bitcoin on the first day of past presidencies. Barack Obama's second term, $17. Donald Trump, $917. Joe Biden, $30,000. Hello, I'm Crypto Casey, and welcome to another episode of Last Week Crypto. Every Sunday, we review the performance of the largest cryptocurrencies, top gainers, as well as the latest global news stories affecting the crypto markets this past week. This week, we will discuss all of the fake news FUD, fear, uncertainty, and doubt, that caused the dip, liquidity issues Bitcoin is facing in the marketplace, and a flurry of extremely bullish news that was largely overlooked due to the media's emphasis on unfounded fake news instead. To check out the links to all the articles we discuss, go to cryptocasey.com/lastweekcrypto. This week's episode is brought to you by Crypto.com, an exchange with over 55 different cryptocurrencies. On Crypto.com's mobile app, you can buy crypto with bank transfers, credit, debit cards, or crypto at true cost with no markups. Crypto.com also has a desktop exchange that is solely for crypto-to-crypto trading, which isn't available in the US quite yet. If you use the link below to sign up for Crypto.com, you'll receive $25 worth of cryptocurrency for free when you use the referral code CryptoCasey, all while supporting the channel. Also, every Wednesday, I conduct a weekly AMA or Ask Me Anything at Instagram.com/CryptoCasey. So use the link to my one and only official Instagram account listed in the description area to follow me and ask me anything you want every Wednesday. I will be starting to live stream content on my twitch.tv/CryptoCasey account, so pop over there to subscribe for some weekly live content soon. Awesome, it's time for Last Week Crypto. Looking at the top cryptocurrencies by market cap, Bitcoin down 13.4%, ETH up 4.4%, Polkadot up 32.7%, and XRP down 3.3%. Looking at the top gainers this week, Engine up 120.5%, Curve DAO up 90.1%, Decentraland up 71.6%, and Hedera up 65.6%. Overall, a bearish week for the crypto markets, so let's go straight into the FUD that caused it. The new Treasury Secretary, Janet Yellen, was one of the main causes of the dip, and I don't know about you, but Yellen's image in my brain exists as this. Yeah, totally photobombed by a Bitcoin plug, so she's salty about it? Well, this week, Janet Yellen suggests curtailing cryptocurrencies such as Bitcoin, saying they are mainly used for illegal financing. Mainly used for illegal financing, eh? Actually, criminal activity in crypto transactions fell sharply in 2020. Chain Analysis reports in 2020, cryptocurrency criminal activity fell to 0.34%, or $10 billion in transaction volume compared with 2019 when criminal activity represented 2.1% of all transacted volume, or roughly $21.4 billion worth of transfers. So Yellen's narrative about crypto being mainly used by criminals is completely unfounded and clearly easy to refute. That FUD debunked. But it didn't stop there. Yellen says the administration will fight currency manipulation. Oh please, if the US truly wanted to fight currency manipulation, it'd instruct the Fed to stop QE, taper their entire balance sheet, and let the market set the US government's interest rates in the free market. But we all know that's never going to happen. Yellen especially would never advocate for any of that, considering Yellen earned $7.2 million in speaking fees over the last 2 years. She's earned more than $7 million in speaking fees from banks and large companies since leaving the Federal Reserve in 2018, a record that will force Yellen to seek permission before working at Treasury with some of Wall Street's largest financial institutions. Yeah, she's totally bought and paid for, but let's be honest, she's not going anywhere. We're just going to have to deal with it. But it actually probably won't be all that bad. She's bullish on stimulus for one, in support of Biden's proposed $1.9 trillion relief plan, saying, "Neither the president-elect nor I proposed this relief package without an appreciation for the country's debt burden. But right now, with interest rates at historic lows, the smartest thing we can do is act big." And if you're in crypto, you know stimulus is great for the market because a lot of people use their stimulus checks to buy stocks and cryptocurrency. Another reason Yellen won't be all that bad is because later in the week she actually started changing her tune about crypto, saying US government should consider benefits of cryptocurrencies and digital assets. When asked specifically about her views on the potential benefits and risks, Yellen wrote, I think it's important we consider the benefits of cryptocurrencies and other digital assets and the potential they have to improve the efficiency of the financial system. At the same time, we know they can be used to finance terrorism, facilitate money laundering, and support malign activities that threaten U.S. national security interests and the integrity of the U.S. and international financial systems. I think we need to look closely at how to encourage their use for legitimate activities while curtailing their use for malign and illegal activities. If confirmed, I intend to work closely with the Federal Reserve Board and other federal banking and securities regulators on how to implement an effective regulatory framework for these and other fintech innovations, she concluded. So all in all, I think the Yellen FUD is just that. FUD, fear, uncertainty, and doubt. All unfounded. Here's another fake news FUD story that put the crypto markets in a slump. Bitcoin falls 11% after reports suggest a critical flaw in the cryptocurrency called double spend may have occurred. Jeez, no. Here's a more detailed explanation of the whole "a double spend broke Bitcoin" FUD that was circulated by an irresponsible publication. You can check out this Twitter thread by blockchain technology legend Andreas Antonopoulos if you'd like to read a longer, more technical explanation of what happened. But long story short, nothing weird or outside the consensus algorithm happened. Bitcoin continues to work exactly as it should. The only thing that happened is bad journalism, if it can be even called that. In a bubble market, a rumor can circle the globe before it is debunked. Consider it debunked. So basically, to recap, these were the crypto headlines this week. Yellen, crypto is for crime. BTC, double spend catastrophe. No double spend happened. Yellen, crypto can improve financial system. Leaving new retail investors like, yeah, so basically there was no legitimate cause for the dump in the crypto markets this week. Here's some advice from Lark Davis we all should take heed of as crypto investors during this bull market. Retail selling, big money buying in. In a day or two, we will start getting all the stats showing institutions buying the Bitcoin dip again. There are 3 players in crypto: whales, plankton, and remoras. Whales eat plankton, but remoras follow the whales and thrive. Be like the remora. Because if you're not like the remora, you're going to be like these people trying to trade Bitcoin saying, time to buy Bitcoin at the market highs, and saying, time to sell to whales, basically at the lows. And by whales, it's becoming more and more big institutional investment firms. But Casey, Bitcoin needs more liquidity to see greater institutional adoption. Inefficient market capitalization is the biggest barrier to institutional adoption of cryptocurrencies, new research finds. But is it really? This is another example of poor journalism, because this is actually an extremely bullish scenario for Bitcoin, because despite the plunge, data suggests the number of hodlers is increasing as liquidity is getting sucked up. So liquidity in finance describes how quickly an asset can be converted to cash, or it can be used to describe market activity. A market with a lot of liquidity means there are a lot of buyers and sellers trading that particular asset. In the case of Bitcoin, liquidity is decreasing, not because it can't be converted to cash quickly, and not because there is low market activity. Liquidity in Bitcoin market is low because people are definitely listening to me and moving their Bitcoin off of exchanges onto cold storage hardware wallets. And people that have Bitcoin are not selling their Bitcoin. People and big institutions buying and holding more Bitcoin than are being minted is creating a Bitcoin shortage on exchanges. Check this out. Going long, 270k Bitcoin moved into storage in a month. Investors are in it for the long run, locking 270,000 Bitcoin away over the last 30 days. The data shows that Bitcoin's liquid supply has consistently fallen over the last 9 months, with liquid supply currently sitting at 21.3% and showing no signs of reversing. Bitcoin's increasingly illiquid supply could be bullish for its price, with new retail and institutional traders vying for an increasingly diminishing supply. Glassnode estimates that nearly 80% of 18.6 million circulating Bitcoin are currently stored in illiquid wallets. So how can you tell me that Bitcoin needs more liquidity to see greater institutional adoption when, in addition to the bullish scenario for the price, BlackRock may start trading Bitcoin futures in its funds? Asset management giant BlackRock may start investing in cash-settled Bitcoin futures trading, according to SEC filings. So Bitcoin liquidity is decreasing, but you know what else is decreasing? Bitcoin dominance. Bitcoin dominance describes the percentage of Bitcoin's market cap, or the value of the total amount of money in Bitcoin, compared to the total market cap of all cryptocurrencies. And when Bitcoin dominance decreases, that means money is flowing into altcoins. which will eventually trigger what we've all been waiting for since the last bull cycle in 2017. That's right, alt season. Bullish. You know what else is bullish? This development we've been following for quite a few episodes. SpaceX expands public beta test of Starlink satellite internet to Canada and the UK. The company has launched more than 1,000 of its Starlink satellites to date as it aims to build an interconnected internet network with thousands of satellites that are designed to deliver high-speed internet to anywhere on the planet. And when anyone, anywhere has high-speed internet all over the world, that means everyone who has been bankless and prevented from participating in the traditional financial system at large will have access to cryptocurrency. An extremely bullish case for the space. It's going to be amazing. And here's another bullish story for the space. Gemini completes SOC 1 Type 2 and SOC 2 Type 2 examinations, leading crypto industry, making them the world's first cryptocurrency custodian and exchange to demonstrate the standard of financial operations and security compliance. And Gemini isn't the only one making moves. Nebraska senator introduces bills to allow state banks to custody crypto. We need to be a leader in fintech, said State Senator Mike Flood. Amazing moves in the banking space for crypto. In addition, we are seeing higher perceived value of digital assets and NFTs or non-fungible tokens, as artist Justin Roiland sold a paper drawing of the Smentons on eBay, and it went for $14,999, while the NFT version went for $290,000. We're seeing blockchains do what they do best, store value. The blockchain version has perfect provenance and censorship resistance, so it wins. And as if it couldn't have gotten any more bullish this week, news-wise, in spite of fake news FUD artificially tanking the market, President Biden freezes FinCEN's proposed crypto wallet regulations. President Joe Biden has frozen all regulatory processes, including proposed FinCEN rules detrimental to the crypto industry. And in case you don't remember, this is the regulatory BS they were trying to impose, requiring registration of self-custody crypto wallets before you're allowed to withdraw cryptocurrency from exchanges to your own personal wallets. And even though Biden has kicked this can of an issue down the road, it doesn't mean that you should continue to wait to own and completely control your own cryptocurrency. So once you have Bitcoin and other cryptos, make sure you are transferring it off of the exchange to hold long-term on a cold storage hardware wallet ASAP. The best time to get a cold storage hardware wallet was yesterday, and the next best time is today. So scroll down to the description area below to access the correct and official sites of my recommended hardware wallets. BC Vault is my personal favorite. Another option is the Ledger Backup Pack. So scroll down and check it out. And before you berate me about Ledger, check out my video explaining the hack that cites blockchain's most trusted experts on the matter by clicking on the link above. Once your crypto is secure and protected, you also need to protect your ability to generate income. And there are a ton of opportunities currently available in the cryptocurrency and blockchain tech space. And the opportunities will continue to exponentially increase. So if you're interested in learning how to become a developer in the industry or learn more about the advanced technical concepts of blockchain technology, check out Ivan on Tech's Academy. Using the link in the description area, you can access the Academy at a discounted price, so scroll down and check it out. At the end of the day, the most important thing to understand is the next 6 months in crypto will be the best time of your life so far. Life-changing gains are coming. Also, Bitcoin is not for the faint-hearted. You will be tested constantly. HODL sounds easy, but in practice, it is an emotional game played out over years. When Bitcoin hits 6 digits, remember that you deserve it for your hard work. Awesome. Well, that was Last Week Crypto with me, Crypto Casey. If you enjoyed the episode, please make sure to like this video and subscribe to my channel for more crypto content. To check out the links to all the articles we discussed, go to cryptocasey.com/lastweekcrypto. So are you bullish or bearish on Yellen? Were you freaked out by the FUD this week? Or did you buy the dip? Let me know in the comments below. Be safe out there.